talked about income from continuing operation and income from discontinued operation. What else can you say on our income statement? Yeah, that is the EPS disclosure. So EPS is also, stands for earnings per share, which is the income earned by each share of common stock. Income per share, that is income, earnings per share, that is earnings per share. But the key here is it is the income earned by each share of common stock. So it is only for common stock stockholders. Which means that when we are calculating EPS, if there's any income belonging to preferred stock owner, we need to take it out because it is only for common stock owners of the firm. And there are two kinds of EPS. One is called basic EPS, the other is called diluted EPS. When a firm has discontinued operation, the firm needs to separate EPS for continuing operation, EPS for discontinued operation, and EPS for net income. So this is for if the firm has discontinued operation. It not only needs to separate the disclose its basic and diluted EPS. It also needs to separate what part of the EPS is from continuing operation, what part is from discontinued operation, and what is the EPS for net income. So as you can see here that separating continuing operation and discontinued operation is very important. And how to calculate EPS? So this is the formula. And then for this course, you only need to know basic EPS. I'm also giving you the diluted EPS formula here. But just for this course, what is required is only for basic EPS. So how to calculate basic EPS? That is earnings per share, right? So earnings, what earning? That is the earnings that belong to the common shareholder. So we need to take net income and take out preferred stock dividend. And then per share, what share? So that is a weighted average number of common shares outstanding. And for diluted EPS, so diluted EPS is basically we need to take out any effect of conversion, because for some firms, they're going to have some financial instruments which may be converted into common stock. So we just assume that they have been converted. If they have been converted, what is the EPS going to be? So here for the net income minus preferred stock dividend, we need to add the effect of conversion, both for numerator and denominator, and that's the diluted EPS. Let's look at an example for basic EPS here. Net income is 600,000, preferred stock dividend 75,000, shares outstanding 1 million outstanding at the beginning of the year, issued 1 million more on March 31st. So please take 5 minutes, try to work on this example on your own, and you can pause your video for now. So EPS, how to calculate it? First, we need to take the earnings that belong to a firm's common stock owner. Net income 600,000 minus 75,000, which belong to the preferred stock owner. And then the rest belongs 600,000 minus 75. So that's 525,000. That is the amount which belong to a firm's common stock owner. And then we need to divide it by weighted average number of shares outstanding. So what do we mean by weighted average number of shares outstanding? The firm has 1 million outstanding at the beginning of the year and issue 1 million more on March 31st. How do we weigh it? So now we're at December 31st. We weigh it by the time it is outstanding. So for the first 1 million, which is we have at the beginning of the year, it is outstanding for 12 months out of 12 months. So that's 1 million multiplied by 12 over 12. It is outstanding for the whole year. However, for the next 1 million, which was just issued during the year, it is only outstanding for 9 months out of 12 months. So for the first 1 million, it is outstanding for the whole 12 months out of 12 months. For the next 1 million, it is only outstanding for 9 months out of 12 months. So we weigh shares by the time it is outstanding. And then this will give you 0.3, which is the EPS. That is the basic EPS of the firm.